Welcome friends, Asli Bania welcomes you once again. Today we have brought you another multi-bagger stock, that is Indian Oil Corporation Limited. Everybody is aware about the Indian Oil Corporation because like most of the fuel pumps where we go to fill petrol in our cars and scooters, it is owned by Indian Oil Corporation. It is a very interesting way and it is a cyclical stock. So we'll see it further during our presentation, why it is a cyclical stock. And before moving further, let me explain that this presentation is neither a recommendation to buy this stock or sell this stock. So please don't consider it. And before investing in this stock, consider a registered stock advisor by SEBI. Now coming back to our standard disclaimer, whatever I have said earlier before the disclaimer, it is because what I am seeing is people are not listening to disclaimer properly. That is why I have explained two lines in the first slide itself. So my disclaimer is that I am not a SEBI registered analyst. So and this presentation is not an advice to buy or sell this stock. So please don't buy and sell this stock based on this presentation. Please consult a SEBI registered advisor before investing in this stock. So now moving on to Indian Oil Corporation introduction. Indian Oil is one of the biggest oil refinery in India. The total capacity it is having is around 71.9 million metric tons. So Indian Oil refineries are currently implementing the BS6 upgradation project, because from next year all cars and scooters as well as fuel needs to be upgraded to BS6 standards. So and what has happened, we are taking a quantum jump from BS4 to BS6, and so we are skipping BS5 standards, and that too in 5 years time. So this is highly unprecedented in anywhere in the world, and if Europe it took around 10 years to go from one standard to another, and we are moving into two standards ahead in 5 years time. So it is quite a good achievement. Now except that Indian Oil commissioned a new polypropylene plant in February, so raising Indian Oil's petrochemical production to 3.15 million metric tons per annum. Now coming back to consolidated financials, so basically if you see the Indian Oil sales in 2012 to 2015 were top line was in the same range, whereas it has started increasing recently. So whatever small variation you are seeing in the top line is because of the fuel price variations, and whatever the top line is increasing currently, it is basically Indian Oil had made a huge investment in Paradip refinery, so that refinery had come on stream, and because of that the top line has started growing up. So and if you see the operating profit, that also after commissioning of the refinery, the operating profit levels are also going up. So even if you see the operating margin, which was in 3-4%, is now going up to 7 to 10% range. Now coming to quarterly numbers, quarterly consolidated financials, if you see say from March 2019 to March, compare March 2018 numbers, numbers are improving. So the top line is increasing, and the profit before tax is also increasing. The other thing is, let me go to next slide. If you see uh, the numbers in this slide, one thing is of very important, that is other expenses. So other expenses, you see the numbers varies a lot, and what happens is actually due to fuel price variations, if Indian Oil has some inventory gains, or it has some inventory losses, that are covered in other expenses. So and if you see that there are a huge price variation in crude, so sometimes Indian Oil reports very less profit. even the top line is good, and when the variations are not large, so it gives a very good net profit. So from, like, this is a perspective that whenever Indian oil profit goes down due to volatility in crude, the stock price comes down after declaring the result. So you may buy it when you see that the in quarter the crude the has not been volatile and the prices have been steady, or if the prices are increasing, so then you can buy this stock, because then it will report good profit in next for future quarters and the stock price will increase. Now coming on to cash flow, company is generating good amount of cash flow from last 4-5 years from the operating activity, and they are also investing in their business by seeing a considerable amount being spent in the business, like various upgradation projects are in progress to convert from BS4 to BS6 fuels. And even if you see last 3-4 years, Indian Oil is also returning out money and reducing their debt, so which is a very positive thing. Now coming back to another regulations, MARPOL regulations. So what is happening is the shipping industry is going through a tremendous change. Like from January 2020, the International Maritime Organization will implement the MARPOL regulations, which will regulate the bunker fuel. So the sulfur content in the bunker fuel used in ships will be maximum 0.5% as compared to 3.5% at present. So what shipping industry is doing, they are using the downstream heavy oil, which refineries were not distillating it further. So that fuel was sold to ships and they were using it in the shipping industry for ships. And what has happened, a lot of environmental concerns were raised due to very heavy oil being used by the ships, and a lot of pollution issues coming on due to shipping industry. So bunker fuel, now coming back to bunker fuel, is a heavy fuel oil which is a downstream product of refineries and mostly supplied to ships. The refineries in India, basically India, are mostly configured to process this sour crudes and have capability to distill heavy oil like bunker fuel. So what is expected is basically the refineries in India, when these regulations are implemented, so there will be a fall in the bunker fuel prices, and our refineries which process the mostly heavy oils as well, so they will see increase in their gross refinery margins, and it might shoot up to $15 per barrel as compared to 6, 7 or 8 dollar per barrel currently they have. So basically what we are trying to say is the margins which they currently have may jump by 100%, and this MARPOL regulations effect will stay only for couple of quarters and then it will taper down, because it will be temporary in nature, not a permanent one. So pros and cons, like Indian Oil is a good company which regularly pays dividend for last 10 plus years, and current dividend yield if you see is around 13.48%, even more than the fixed deposit, but you should not look at that it will be permanent, it can reduce also. The promoter holding, which is government, is around 52%, and around 6.5% is with various mutual funds and FIs, 6.5% is with LIC, 14% is with the ONGC, and 5% is with Oil India Limited. So if you total all these sums, it comes to around 84%. So only 16% is with retail shareholders. Now coming to cons, the company profit has regularly faced crude price and exchange rate volatility, leading to inventory losses. So that is why we are trying to say that IOC is a cyclical stocks. So basically when they face inventory gains and the profit level reduces, the stock price comes down, and that is why you are seeing that dividend yield goes up. Now the final review for 2019, Indian Oil Corporation is available at a CMP of around 156, PE of 8.45, and market cap of around 148,000 crore rupees. Uh, it is expected that the EPS will be temporarily increased to rupees 50 in next year because of the MARPOL regulation. So the final verdict for IOC is at very interesting valuation. Minimum price expected is around rupees 500 based on PE of 10, approximately 3x opportunity. So you can make 3 times money from 1.5 year perspective. But this we have to be very careful because the thing is the MARPOL regulations effect will be temporary in nature, and you should be quick to book the gains. Otherwise it might happen that if you are holding the stock, the price again comes down, so it will be a short term opportunity. So this is a low risk stock at the current price, and the probability of price fall is very low. Okay, and thank you friends, and if you like my presentation, you can subscribe to my channel by clicking on the link below blue colored arrow. Thank you very much, and see you next time.